Let's bring in Stuart Hoffman, chief economist at PNC Financial Services Group. We call him a Bloomberg best because Bloomberg ranks him as one of the most accurate economic forecasters. He joins us from his office in downtown Pittsburgh. Stuart, welcome back to Bottom Line. Always good to have you on.
Glad to be back.
Stuart, you heard Peter Cook's remarks about some of Secretary Geithner's comments. The Secretary saying that the global economies, in his opinion, do have enough crude oil reserves to soften the blow of any sustained supply disruption. How worried is the U.S. about this situation?
Well, as Peter said, the Secretary talked about a wide range of issues. Three of them caught my ear as I heard them. The first was about the strategic petroleum reserve that we have in the U.S. and they have in Europe. I was actually glad to hear the Secretary say, kind of remind everybody that it's there. We haven't heard anything about it. It seems like it's been a one-way street on speculating that oil prices are going to go up, and a reminder that Europe and the U.S. have some reserves that they could release, and that's what they're there for.
Right.
At least shows that we're thinking about that, and I think that would be important if it came to that. The other thing I heard him say, of course, is China still pointing out their currency, continuing to put pressure on them that their currency is undervalued, and I don't know how successful that'll be, but, you know, putting more pressure on the Chinese to allow their currency to appreciate. And on the budget, well, obviously looking for support there, but let's face it, the president's budget's running into a lot of headwinds in the Republican House.
We're going to talk about that in just a moment, but more on some of Mr. Geithner's prepared remarks. He did say that those rising commodity prices are causing considerable hardship. We've been talking about that over the past couple of days here at Bloomberg. I was just talking to retail analyst Lori Wax, and we're noting that as these oil prices continue to rise, of course, that's going to get passed on to the consumers. Is that, as I mentioned to Lori, going to throw a wrench into this economic recovery?
Well, it'll definitely be a problem, particularly in the agricultural sector. We've already seen rising agricultural prices. Diesel fuel is very important in agriculture. That's going to be passed along. And clearly, food, you know, is maybe at the bottom of some of the riots that we've seen and outbreaks in northern Africa. So, yes, I do think it could cause a dent, but I'd remind everyone that over 3 years ago when oil and gasoline was rising, say in 2008, the economy was in recession, jobs were falling, meaning we were already at the edge, and I would say the rise in oil at that point was adding insult to injury. This time jobs are rising, the economy's coming out of recession, gives us a little bit of reserve to withstand higher oil prices before it topples the U.S. economy back into recession, and I don't expect that to happen.
And Stuart, speaking of jobs, if we could look forward, what are you expecting from tomorrow's jobs report? More good news?
I am looking for good news. I mean, we had the ADP yesterday, but all that did was, you know, fake us out the last couple of months. I have 160,000 rise in jobs. Some of that's a rebound from the weakness in January. I wouldn't be surprised if December and January job gains were revised up. And to be honest, my brain's telling me 160. My gut's telling me it could be a little higher. And in fact, I think the whisper number on the street is closer to 200,000. So I think that would be good news, especially if hours worked went up a little bit, as I expect that will. More jobs, people working longer time on the job means more income to at least help absorb some of the cost of higher energy prices.
And Stuart, in his prepared remarks, Mr. Geithner also did mention, he said, the economy in the U.S. is, quoting here, gathering momentum. The risk of rising inflation is, again, quoting, modest. But it was interesting the other day during our coverage of the Beige Book that the specter of inflation was also mentioned, and that took a lot of people by surprise. Is that lurking on the horizon, or is this quantitative easing that the Fed's involved in right now, is that enough to dampen any threat of inflation going forward?
Well, I don't think I think the Fed will finish quantitative easing 2. I don't think they'll launch quantitative easing 3. You're right, the Fed's own Beige Book, now these are quoting, you know, contacts around the country, said that higher prices, particularly in that manufacturing, were going to be passed along. We'll see whether they stick or not. Actually, the Fed wanted a little more inflation. You know, be careful what you wish for. So I actually saw the Fed's discussion that inflation was maybe going to be a little bit higher. Non-energy inflation was frankly what they wanted, and I think the risks of deflation are totally off the table, and we're not going to hear about that much from the Fed. But I don't think we're shifted 180 degrees where the market should be all that worried about inflation, and I think the Fed can still act in a very timely manner if these price increases stick and start to gather momentum.
Stuart Hoffman, Chief Economist, PNC Financial Services Group, joining us from the great city of Pittsburgh. Stuart, thanks so much. Appreciate it.
Thank you.